Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore FinTech Festival, and joining me for this segment, we have Nikhil Joshi. He's COO of EMURGO. We're here to discuss how digital assets have matured as an asset class and if they have a sustainable place in finance. Nikhil, it's great to see you again. Welcome back to TradeTalks.
Thank you.
All right, and we've met here a number of times at Singapore FinTech Fest, and we've seen how the conversations around digital assets have matured. What's your take on that, and then do you think that there is a sustainable place for them in the future?
Absolutely. I think what we're seeing, particularly with stable coins over the last couple, in essence, the door opening towards tokenization. This is the traditional world understanding how can we use a crypto format, right, to do something a little slicker. In this case, better liquidity, faster settlement, and so forth. I think a couple of years back, 3 years ago, perhaps a bit more, stable coins were your entry point. Right, so this is my way to hedge my volatility. It saves me the inefficiencies of going back out into fiat. I think now we're already seeing that people are interested in stablecoin plus a yield, right? Something a bit more interesting, a bit more esoteric. Alongside that, we're seeing more experimentation and awareness of what does tokenization bring. And so we're seeing a lot of already fairly liquid assets being put into a token format, because again, the quicker settlement, the increased liquidity that brings is great, and people are understanding that. I think what we will start to see is experimentation around the more illiquid assets, right? So tokenization in itself may not solve that. So I think there'll be a need to sort of bring out some of that nuance between how do you create real demand, how do you solve for accessibility and distribution once you're taking something quite sticky, like a building, and trying to tokenize it.
Right, so let's talk about that. What TradFi can learn from DeFi, or in other words, how can they collaborate together to be able to deliver these products to investors, because there certainly is demand for these alternative types of investments.
100%. I think in a way we need to talk to them less as if they're zero sum. Right? So DeFi and traditional finance, I don't think are opposite sides of the fence. DeFi is a way of doing things. Now we may talk about a certain organization being a DeFi player. I think they're the ones who are trying to push the boundary a little bit. And where is the experimentation? Where is the opportunity here? But I think that we are already starting to see what I would call the green shoots of understanding, particularly within the traditional space, of what is this slicker way of doing things, and that is essentially decentralized finance. The ability to remove certain intermediaries and rely on smart contract functionality to let something execute by itself, right? And so I think that education curve is starting to, get to a steeper gradient, and I think we're going to see a lot more experimentation from bigger names, and that will open the doors for the mid-tiers, the lower tiers of various types of financial institution to come and play in this space. Yeah. And he talks about investment, and yes, absolutely, you're right. So I think with Bitcoin ETF, everyone's pointing to as a real kind of flag in the sand for institutional adoption. Past Bitcoin, there is the Ethereum and the Cardanos and so forth, which brings in the smart contract functionality. So here I think we need to be mindful that yes, there is a cryptocurrency associated with those public blockchains, and if one wants to take a punt or speculate on that price, one can do so. But that tech stack can do serve a lot more purpose within those financial institutions and between those financial institutions. And that's where there's a lot of capital that's locked up today, a lot of liquidity that's locked up today that financial institutions can benefit from unlocking. Yeah.
So EMURGO's role, what is that in terms of growing Web3, and what's next?
Sure. So we're a co-founding entity of Cardano. Our mandate is to facilitate commercial adoption. So we will go out and work with various types of partners, be they market makers, Web2 players, custodians, other layer 1s and 2s, to try and bring them closer to the Cardano ecosystem so that there is, should we say, an easier way of executing one's commercial activity. A lot of this is predicated on technical integration, right? Particularly when we're trying to partner with other layer 1s, right? That's fine, that's just part of the roadmap. But we want to bring Cardano to other ecosystems. We want to bring other ecosystems to Cardano, because everything leads to interoperability, in our view. Seldom do you have organizations that are wedded to tech. What you often have is organizations who are wedded to an application that's fit for purpose and very slick and snazzy in what it does. And so that's the direction of travel. EMURGO aside from that Cardano piece, we've built our own tokenization platform. We're launching a US dollar-backed stablecoin on Cardano before the end of this year. We've announced partnerships with a Japanese listed company called Unbanked on a gold tokenization project called Kinka. And we'll be announcing others in due course, one being insurance related, and we have a pipeline around real estate and IP. So this is really to demonstrate that we have an asset class agnostic tokenization platform. What we want to do is work with partners who already know the asset class and the market, who can solve for the demand, accessibility, and distribution challenges here.
And that's because interoperability has improved at the rate that it has, that these projects are able to come online through a number of different intermediaries and partners.
Sure, certainly we've seen a lot of activity in the Ethereum space.
Right.
That's where the biggest concentration is. And people will typically follow where the liquidity and the price will follow liquidity, and liquidity will happen if there's a lot of activity, right? And so it's important for true interoperability, and I'm going to make a distinction between EVM compatibility and interoperability. EVM compatibility is fine, right? But there is a risk here that if something happens within that Ethereum stack, the whole thing falls down, right? And so I think there is definitely merit in considering something that is not EVM compatible, right? Cardano being an example of that. Now we would love, right, for Cardano to become EVM compatible, for it to work with the other UTXO chains. In fact, we announced just 2 weeks ago that we've partnered with Bitcoin OS, right? So this is now a way to unlock assets that are trapped on Bitcoin and apply a smart contract functionality over the top. That's enormous, right, in terms of bringing liquidity, releasing it through, and having two huge UTXO ecosystems talking to each other for all sorts of functionality that hasn't really been explored yet, right? So yeah, absolutely, interoperability is key, and this is not a zero-sum game.
Right, exactly. All right, appreciate the insight as always, Nikhil. Thanks for joining us on Trade Talks, and thanks for joining me from the Singapore FinTech Festival. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.